Good morning, students. Right, we are busy talking about property, plant, and equipment. Excuse me, we're going to continue our discussion from where we finished last time. Last time we were talking about asset exchanges. We had a look at how you determine the cost of the asset or the purchase price of property, plant, and equipment in the case of an asset exchange. We've gone through all the various possibility. However, there's one further possibility that I just want to point out as well. I think it's on page 20. Hopefully, you've gone through these examples. They are quite detailed there. Yeah, that's the one other. Let me just see. There's something in the chat. I think it's a private message. Okay, I'll have to attend to that later on. Uh, we've spoken about where the default situation. The default situation is where you use the fair value of the asset that you are trading in or that you are giving up, that you are using as a partial payment for acquiring the new asset as the purchase price. And then we looked at the exceptions to the rule. There's actually one more, and that is this one here, where where that specific exchange has no commercial substance. Now, what is meant with no commercial substance is where you are basically trading like for like, right? So let's say, for instance, I've got a red Volkswagen Golf 19, let's say 2020 model, excuse me, and my friend has got a blue one, also a 2020 model, also a Volkswagen Golf, same model, same everything, just a different color. And if we then decide, okay, I'd like the blue one for the rest of of this century or for the rest of this decade, and he likes my red one, then we swap them, and then that means it's really like for like. There's no material difference or in the substance of the two assets, right? Then we also use the carrying amount of the asset given up as an estimate of the fair value of that asset. So I just wanted to point that out. The initial cost, ladies and gentlemen, we've done that in Financial Accounting 1. So you can go through those notes there. They are comprehensive, but we've discussed the three components of the cost of property, plant, and equipment. We can maybe just repeat them again. It's your purchase price, any directly attributable cost, and then any certain future cost that you are going to incur at the end of the useful lifetime that you can already quantify at this point in time, right? So you can go through all of those. I think page 24 is the next spot I want us to go and stop. Yes. So now really we are going to talk about significant parts, ladies and gentlemen. We've spoken about this briefly a few weeks ago already, but now we are going to go into more detail. Now, you remember the example that we used a few weeks ago. A typical example is an aircraft. So if you own, let's say, a Boeing 747, for example, right, and the left wing needs to be replaced, you are not going to replace the whole aircraft at $450 million. You're only going to replace that left wing that has been damaged, right? So therefore, ladies and gentlemen, we need to have a method in which we can account for significant parts of an asset. And here you must now be take maybe a few notes. It's all in the notes, but I mean, if you want to take some additional notes, this might be a good time to start. Now, when we have any kind of property, plant, and equipment, and we can identify significant parts. Now, this is where we need to take a few notes. What do we mean by a significant part? That is the first thing that unfortunately I haven't actually described in the notes. So, what is meant by a significant part, ladies and gentlemen? There are basically three aspects to it. First and foremost, it must be a part that can be replaced on its own, right? So, in other words, like the wing of an aircraft, you can take off the wing that has suffered metal fatigue, that has now got a few cracks in it, and you can replace it. So that is the first and foremost prerequisite for a significant part to be capitalized separately. Then I think the word significant part says basically what we are going to describe now. It has to have a significant value. So you're not going to capitalize the steering wheel of a motor vehicle separately from the rest of the vehicle because it's not significant in value. But in the case of let's say, a wing of an aircraft, which in its own right has a cost of more than $1 million, uh, that certainly has got a significant value, right? Or a material amount as a value, right? So we need to be able to replace it separately from the rest of it as of the asset, and it must have a significant value. And then, ladies and gentlemen, normally, before we capitalize that significant part separately, the third thing is that normally it should have a different useful life to the rest of that specific property, plant, and equipment item, right? So if we look at, for instance, an aircraft again as an example, a wing will not have as long a useful life as, for instance, the interior fittings, the TV sets and the seats and the stowing cabinets and those things. They will normally have a much longer useful life than, let's say, an engine or a wing or a tail wing. Right. So those are the three things that we've got to keep in mind when we identify a significant part, right? It must, first of all, you must be able to replace it apart from the rest of the asset or any other component of the asset. It must be significant in value. And normally, before you capitalize it as a separate item in a separate ledger account, uh, you will determine that it has a significantly different useful lifetime than the rest or any other part of that asset. Clearly, if it has got exactly the same useful life, then you might as well combine or consolidate your accounts. Okay, ladies and gentlemen, and then what we need to know now, you remember when we did property, plant, and equipment as an introduction in financial accounting one? We said, how are we going to create names for our general ledger accounts, right? This is described here. Now, in financial accounting one, we didn't identify significant parts yet. We only had the overall asset itself, or perhaps a category of property, plant, and equipment, such as motor vehicles or aircraft or plant and machinery or office equipment and so forth. The point is, ladies and gentlemen, how did we determine the name of our accounts? We said, first of all, we are going to identify the asset, the overall asset. In this case, this company has got an aircraft, or it might have a fleet of aircraft. So if they only have one aircraft, they'll probably say, let's say, Boeing 747 Drakensberg, right? So they'll identify that specific aircraft. If they've got a fleet of aircraft, then they'll simply use the category of aircraft. So the point is that first and foremost, you are going to identify the overall asset. Let me just see in the chat there. Abigail, sorry, so I'm about to get load shedding. Uh, Abigail, the good question there, because I think in your subject guide it still indicates the class test as the 18th, if I'm not mistaken. But now we must remember the subject guides were drawn up and were written at the beginning of the year before the academic year or even started. And then we had that campus lockdown after the after the rioting. So it has been slightly adjusted. So now the class test will be on the 25th, so 1 week later. So it's Friday the 25th of August, right? Friday the 25th of August is class test number 3. I I do have a preliminary timetable for the formal test, but it has not been confirmed as the final one yet. But provisionally at this stage, we are writing formal test 3 on the 1st of September. But that date is not cast in stone. In fact, in the last provisional timetable, it is still indicated as the 4th of September, Monday, the 4th of September. But then the problem was that the timetable was very congested. Students would have written every single day of the week. So we as a subject volunteered to have it moved to the Friday before the 4th, but that has not been confirmed yet. You're writing accounting information systems 1C on the 1st of September. Yeah, that's what I meant by it was congested, Mr. or Ms. Geier. It is I think you had to write something like 6 or 7 subjects in 5 days. On certain days, you would have written 2 subjects. That is why we said that we are okay with it if we can move one subject, which I don't know which one subject to the 4th term, right? Thank you, Lucille. One subject to the 4th term, and then one subject to which will probably then be financial accounting 2 to the Friday before that assessment week, which will then mean that there are no days in which you will be writing 2 subjects or more than one subject on the same day, and you might even have a day open between some of those subjects. So that's a long story. I'm sorry about that, but the class test we can confirm 25th of August, 2 o'clock in the afternoon. And then the formal test we'll still have to confirm the final dates. We've only got the preliminary. Yes, 25th of August is the class test, right? The class test at 2 o'clock, yes, and online, yes, quite correct. You're most welcome, everyone, Abigail, and everyone that participated there. I've got another class after this one. I've got financial accounting 1 as well. So I can't tell you exactly when I'll be able to load this recording. It'll probably only be after 5 this afternoon because of my afternoon class. Right. Ecolanisi, will the test only contain theory questions? No. There will be very few theory questions. There might be a few. There will be a few, because we must still know, for instance, the definition of assets. We must still know the definition and recognition criteria of property, plant, and equipment. So there will be a few theory questions, but there will also be, it'll mostly be practical questions. We'll see. We'll go through a very comprehensive example later on today. It'll be similar to that and very similar to those questions that you can find in the question bank that we've made available to you. Okay, let us come back to the names of our accounts, ladies and gentlemen. So we said in Financial Accounting 1 that first of all, you're going to identify the category of assets, or if it's a very, very significant asset and you've only got one of that kind, you'll identify it by its specific name. And then we are going to indicate there a colon. A colon, we'll come back to that just now. A colon, and then secondly, we would then indicate what does the account contain. Does it contain, for instance, the cost of that particular category of assets? Does it contain the accumulated depreciation of that category of assets? Does it contain the accumulated impairment losses? What does the account contain? But now, however, ladies and gents, now that we are Sibongile, the November exams will be online, but it will be on campus, right? So it's not going to be off campus. It'll be supervised or invigilated on campus. Now, when we are identifying significant parts, ladies and gentlemen, we have to use an additional, a third identifier. So now we are going to add that third one. By the way, the colon, why we are using aircraft colon, outer body colon, cost, and so forth, is to integrate with computerized or electronic accounting packages, right? You all now know that you are doing Sage 1 Cloud accounting, for instance, in AIS 1C or B, I'm not sure now, 100. But anyway, you are doing Sage 1 accounting. There are many other packages available on the market, like QuickBooks and so forth. And how they normally work, as you've probably now experienced for yourself, how they normally work is that you create your set of accounts, or you might have a preset set of accounts that has been preset for you, but you can, in any case, you can adjust it as you wish. And normally, when it comes to your accounting package, you can also use it as your non-current asset register. So it doubles as that, not only as your books of initial entry and your ledgers, but also your, in the case of PPE, your non-current asset register. So you will normally then have a main account called, let's say, motor vehicles, and then you'll have sub accounts of that main account called cost and accumulated vehicles. I mean, vehicles, motor vehicles, cost, motor vehicles, accumulated depreciation. Motor vehicles accumulated impairment losses, and so forth, right? So our method that we are using by identifying the overall asset, and then secondly, what does that account contain, brings it in line with electronic methods of keeping your books or doing your accounting, right? Keeping your accounting records. But now, once we have identified significant parts, like in this particular case for the aircraft, our category of assets that we call aircraft, we have now identified three major or significant parts, namely the outer body component, the various engines, and the internal fittings. Now we've got to add that to our description or to our identifier. So we are going to first of all name the name of the overall asset or category of assets, which is aircraft, colon, then the significant part, then we name the significant part. So we give it a name such as outer body or engines or internal fittings or machinery or cooling equipment. We'll see when we get to some of those exercises. There are many possibilities. So you as an accountant will just have to be creative and describe it as best you can. And then another colon, and then in this case, it's our third descriptor is what does the account contain? Does it contain the cost? Does it contain the accumulated depreciation? Or does it contain the accumulated impairment losses? And like we said last time, you could also have a combined account for the latter two, which you would then call your accumulated depreciation and impairment losses. Many of our examples are actually using that method, but I did mention last week or maybe the week before that my personal preference is to keep them in separate accounts. Right, ladies and gentlemen. So now you can read through that. We are going to look at a very comprehensive example a little bit later on. Subsequent costs, ladies and gentlemen, you can go through on your own. You'll remember we've already done that in financial accounting 1, so there is nothing new there. Let me just see which one is it that I wanted us to have a look at. This one, example number 3, where we have subsequent cost that needs to be capitalized, and also the derecognition of a part of the asset. So let us work through this example, and then later on we are going to look at a very, very comprehensive example dealing with significant parts and derecognitions and so on. Right, so they say here on the 1st of January 2020, MAT Limited purchased a second-hand delivery vehicle for 50,000 rands, right? The delivery vehicle did have an old, worn out engine at the date of purchase. Sorry, there are a few typos here. The manager estimated that the delivery vehicle will have a useful life of 3 years, right? So we've got a cost or a purchase price of 50,000 rands. There are no other directly attributable costs. So that means our total cost is also 50,000 rands, and we estimate the useful life to be 3 years. Now they say 1 week after the acquisition of that vehicle, the old engine has stopped working. It has probably seized up. They might have driven it without oil and had to be replaced with a new engine at a cost of 30,000 rands, right? So we had to replace that engine now. And you can see when you look at the materiality, the 30,000 rands is quite significant in relation to the total vehicle value. So it already seems to qualify as a significant part. Now they carry on and they say it was estimated that the old engine had a book value or carrying value, if you wish, of 5,000 rands, right? The body of the delivery vehicle will still have a useful life of 3 years, but now they say the new engine's useful life will be 8 years. So now we can see it has a very significantly different useful life than the rest of the body. So we're probably going to scrap the body in 3 years' time and reuse that new engine that we've bought in a shell of a motor vehicle, right? And then they also say on the 31st of December, the delivery vehicle was serviced at a cost of 4,500. Now, what is required of us, ladies and gentlemen? We have to record the acquisition of the vehicle, the derecognition of the old engine, the acquisition of the new engine, and the depreciation and the service cost at the end of the year. Okay, and then we've also got to motivate why the payments will be capitalized or expensed. Right, clearly the 4,500 service cost will be expensed, while the 30,000 rands as well as the 50,000 rands purchase price will be capitalized. So we start here, ladies and gentlemen, with first of all the acquisition of the motor vehicle overall, right? So what we need to do at this stage, we haven't identified any significant part yet, right? We haven't. We've only bought that whole motor vehicle. We didn't know that in a week's time the engine will seize up, that the engine will break. So at that point in time, we debited the account called vehicles. In other words, the overall or the name of the overall category of property, plant, and equipment, vehicles. And what does the account contain? Vehicles, colon. It contains the cost. We debited that with 50,000 rands. Assuming that we bought it, we did let's say an internet transfer, an EFT on the same day, we would have credited the bank account. If we had bought it on credit, we would have credited accounts payable or creditors, as you know, right? Okay, here they explain why it should be capitalized, right? And now we've got to go and de-recognize the old engine, right? So how are we going to de-recognize the old engine, ladies and gentlemen? Let's go and see. They say that the old engine, it was estimated that the old engine had a book value, a net book value, or a carrying value of 5,000 rands at the end of the when it broke, at the date that it broke. So at the end of the time that we are able to use it. Now, what will have to happen here, ladies and gentlemen? Unfortunately, we do not know. They do not tell us in this example what the cost was estimated at or what the accumulated depreciation was estimated at. So our only route that we can follow here is to take that value of the engine out of the cost account, right? So there we're going to have an impairment loss, ladies and gentlemen. So we're going to call it an impairment loss or a loss on derecognition of the engine of 5,000 rands, which we will debit. And then obviously the value of the overall vehicle now needs to decrease by 5,000. So we're going to credit vehicles colon cost, with the 5,000 rands. Right. So, what remains after we've credited that account? What remains on that account? If you can just type in the chat for me, I'll just want to see whether we're still on the same page. What balance remains on the cost account at this stage? 45,000. Thank you all. Thank you. CB, first of all, quickly, and everyone else. Right. So 45,000 rands remain. So we know that is the balance on the cost account after we've de-recognized the old engine. Now, ladies and gentlemen, what we now need to do, because we have now purchased that new engine and we've seen that the cost is significant, it has a different useful lifetime, it can be replaced separately, so it ticks all those three boxes. Now it means we'll have to go and identify our significant parts as part of our accounting system as well. So what we now need to do is we need to go and create a new ledger account that is going to describe the body of the car and the engine of the car separately. So, what we need to do, ladies and gentlemen, we're going to create that account called vehicles, body, cost. And we are going to transfer the remaining balance from our original account to that account, which means we are going to credit our original account, which was called vehicles, cost. We're going to credit that with the remaining balance of 45,000 rands. We're going to transfer it over. In other words, we're going to debit that new account called vehicles, body, cost with that same 45,000 rands. And then we've acquired this new engine, ladies and gentlemen, which we also now need to go and capitalize. But now remember that new engine was never part of the vehicle cost account. This is now a new engine that we are acquiring. So we also now have to go and create a new ledger account for it, right? What are we going to call it? Name of the overall category of assets, which is vehicles. What is the name of the significant part? It's the engine. And what does the account contain? The cost, right? So we're going to create an account called vehicles, engine, cost. And we're going to debit that with the full cost of that engine that we have now just acquired, right? And if we are going to pay for it immediately, we're going to credit our bank account. So, ladies and gentlemen, at this point in time, I'm going to ask you now a few tricky questions, perhaps. At this point in time, what is the total cost of the motor vehicle? What is the total cost of the motor vehicle? 75,000. Thank you, Wanda, and everyone else. Right. So the total cost at this stage of the motor vehicle is 75,000. And now we'll have to go and calculate the depreciation on the body of the car separately from the depreciation of the engine. Because as you know, the body of the car still has a remaining useful lifetime of 3 years, as we've seen earlier, whereas the engine has got a remaining useful lifetime of 8 years. So we'll have to go and calculate our depreciation separately. But now there are a few little notes that we've included here because we've found, ladies and gentlemen, that students every year, for the last, well, as long as I can remember, students tend to make a few very basic, silly mistakes here. Very often, when they go and de-recognize a significant part, and we're going to, like I said, go through a very extensive and comprehensive example later on. When they go and de-recognize, let's say the engine, right? When they go and de-recognize the engine, then they call suddenly that account vehicle old engine cost. But remember, when you bought the engine, it was not an old engine, right? It was a new engine. So the name of the account is not new engine or old engine. It is just engine. And if you de-recognize this engine at some point in time in the future and you recognize a new engine, you are going to reuse that same account, right? You reuse that same account. So please do not call it old engine and new engine, because the old engine was a new engine when you acquired it. Okay. Um, Okay, so now we have to go and calculate the depreciation on those, on that motor vehicle. Why I asked what is the overall, what is the cost of the vehicle as such, which you answered correctly as 75,000 rands. We must just remember that when we are drawing up our property, plant and equipment note, in the note, we are not going to identify the significant parts. You remember the note that we did last year already? It's right at the end of the notes. We've got an example of the PPE note again. We are only going to identify the overall assets or the category of assets. So we're going to have a column for vehicles. We might have a column for aircraft. We might have a column for plant and machinery, but we're not going to distinguish in our note or in our financial statements whatsoever the significant parts. The only reason why we have the significant parts separately in our ledger accounts is to enable us to properly calculate the depreciation on those significant parts, because we have to do that separately. So, ladies and gentlemen, we've now got the body, which has a useful lifetime of. Let us just go up there again. Where was it? A useful lifetime of 3 years, and it still has a useful lifetime of 3 years, as we can see there. And then the new engine that has got a useful life of 8 years. And we know that the remaining balance on the or the new balance on the vehicle's body is 45,000, and the new balance on the vehicle engine cost account is 30,000 rands. Right. So now we've got to go and calculate and record the depreciation. So we'll have to do that separately. Okay, ladies and gentlemen, we can see those journals in front of us. So how are we going to do this? We're only going to have one depreciation account for each category of property, plant, and equipment. Mr. Kalidin, welcome. Exactly, exactly. Thank you, Mr. Kalidin. I appreciate that. Yes. Right, ladies and gentlemen. So we are going to remember our expense accounts. Our expense accounts and our income accounts are closed off. They are closed off at the end of the year. They're closed off to our profit and loss account. Whereas our let's call it so-called balance sheet accounts or statement of financial position accounts, their balances get carried forward from the one year to the next. So we're only going to have one depreciation expense account for each category of property, plant, and equipment. I would have preferred that to be called depreciation uh, vehicles, for instance, right? But anyway, the main thing is when it comes to the contra account there. So first of all, we are going to, or doesn't matter which order we do it in, but let's say that in this case we do the depreciation of the body of the vehicle first. How are we going to do it? Assuming that it has got no residual value, because they did not mention anything about a residual value. When we get to the more comprehensive example, we will have residual values. It means we are going to look at what is the remaining cost in that for the body. It is 45,000 rands as you've typed there. It has a remaining useful lifetime of 3 years. So if we take that 45,000 divided by 3, it means the depreciation for the full year at the end of December will be 15,000 rands. Okay, so we're going to debit the depreciation expense with 15,000 rands. Now, ladies and gentlemen, we have to have an account that is going to carry that accumulated depreciation for us from the one year to the next. And we're going to use our same method of creating the name of the account. So we're first of all going to identify the category of assets, which is our vehicles. Then we are going to identify the significant part, which in this case is the body of the vehicle, colon, and then what the account contains. Now, we don't know whether there are going to be impairment losses yet, so we might as well just at this stage call it accumulated depreciation. Right, that is what the account contains. So the full name of the account is vehicles, colon, body, colon, accumulated depreciation. Or if you expect, or if you have even had some impairment losses in the past, and you are using the method where you use a combined account, then you will call what it contains the accumulated depreciation and impairment losses, and that will then be credited with that 15,000 rands. But now, ladies and gentlemen, we also know that the engine has now been separately capitalized. It has its own little ledger account, right? So now we've got to go and calculate and record the depreciation on that engine as well. So again, we are going to debit depreciation, the expense, or I would have preferred to call it depreciation dash motor vehicles or vehicles, be that as it may. And then we've got to create a separate account that contains the accumulated depreciation of the engine. And how are we going to formulate the name of that account? Name of the overall asset or category of assets first, which is vehicles. Then secondly, what is the significant part that we are referring to, which in this case is the engine. And then thirdly, what does the account contain? It contains the accumulated depreciation, or if you are using a combined account, the accumulated depreciation and impairment losses. Right. How do we calculate the depreciation? Well, again, they did not mention anything about a scrap value or a residual value. So we have to assume that it will have no residual value. So we take the cost of 30,000 rands, and because it has no residual value, that 30,000 rand then also becomes our depreciable amount, as we've spoken about last week and the week before, and possibly before that as well as last year, right? And it's got an expected useful lifetime of 8 years. So we simply take the 30,000 depreciable amount divided by the number of years, which then gives us our annual depreciation. And this was actually for a full year. So that will give us 3,750 rands. So we're going to debit the depreciation expense for that, and we're going to credit the accumulated depreciation for the vehicle engine with 3,750. Right. So the vehicle engine, just to repeat it for one last time, the way that we design the name of the account, just for it to be consistent, what we find with our accounting software, is to then, first of all, identify the name of the overall asset or asset category. Then we identify the significant part, and then we identify what the account actually contains, whether it's the cost or the accumulated depreciation or the accumulated impairment losses or even the accumulated depreciation and impairment losses. Okay, so let us just pause there. Let me have a look at the chat there. Will the depreciation amount for the engine change when we acquire a new body for the vehicle after its useful life, sir? Good question, Henrique. Thank you for that. No, it won't. It won't. So if we, after 3 years, we buy a new shell, a new body, right? A new body, then it means at that stage we have used up 3 years of the engine's useful life as well, right? So it means that the remaining useful life at that point in time of the engine will be 5 years. So you will simply continue with your normal depreciation of the engine. So each year, each full financial year for the next 8 years, you are going to write down a depreciation expense of 3,750, right? In 3 years' time, you would have written off the vehicle body to zero. You're going to scrap it, and then you are going to obviously buy a new body that you are going to install that engine into. And that new body might then have a totally new or a different useful life. But in the case of the engine, it will just go its normal course. So you will just keep on depreciating it by 3,750 rands for each full financial year. So the 40,000 on page, you're most welcome, Enrique, on page 29. What is it for? 40,000 on page 29. Let us just go and have a look at that.
Sorry, Mr. Colin, to this interject. I think it's a typo. Guys, that 50, the vehicle cost, remember when we showed the asset, showed it as a whole of 50. So we recognize that asset. We moved at 50, we moved the 5,000. So in that vehicle cost, remember, what are we doing now? We are basically separating each component because it's now regarded as a significant part. So therefore, it should have read as 50 minus the 5, giving us the 45. So what we have done now, guys, is from the old, okay, not using the word old, but from the vehicle cost, we now remove the 45,000 and we show as the vehicle body cost of 5,000. Thank you. Sorry to interject.
Now, Mr. Kaladin, you're always welcome. Thank you very much. Any contributions are welcome and well spotted there. I only realized now what Miss Fanny meant there. Yes, that is actually a typo, ladies and gentlemen. That should have been 50,000. So it's the original cost. Sorry about that. I never even picked it up, and it's not the first time that I've gone through these notes. So it is that 50,000, the original cost of the vehicle, like Mr. Cullidan now also pointed out. So that should be 50,000. Sorry, Miss Fanny, that is a typo actually. So that should be 50. Unfortunately, this is now, I've already printed it to a PDF, so it's not the Word document anymore. So I can't change it live now, but I hope to remember to do that afterwards. Thank you, Mr. Kaladin. And like I say, you anytime, you're always most welcome. Okay, then what else? There was just one more thing that I wanted us to go through when it comes to the notes. I think it's this, the replacement. Yeah, it's all about this. Now, ladies and gents, I just want you to make a few notes here. When it comes to the replacement of a part, sorry, my system now for some reason has become very slow. There, it speeds up again, but now it's sped up too much. I don't know why it's moving so slow. Let me maybe go to a different page for a change. When it comes to the replacement of a part of an asset, and this is now again a good time maybe to take a few additional notes. It is in the notes, but sometimes it's nice to have your own little summary of notes as well, right? When it comes to the replacement of a significant part, there are basically 4 steps that you need to take into account, ladies and gentlemen. 4 steps that you need to take into account. It will become clear as we work through the notes and through the comprehensive example. But I think just for your own purposes, maybe make a little summary of this. So. Thank you, Mr. Cullidan. Yes, at least they've got some additional resources here. So many aspects are similar to gripping guard, but there are also some other aspects that we emphasize, like those common little mistakes that students tend to make. So that's all incorporated into these notes. Thank you, Mr. Kaladin. So, ladies and gentlemen, the 4 steps that you need, that from an accounting perspective, that you need to take into account when you are going to replace any significant part are the following. And please, like I say, just summarize it for your own purposes. Your first step, and this now in this case, the order is actually pretty important because you cannot really change it. So our first step, ladies and gentlemen, will be to ensure that our depreciation is up to date on whatever part that we are going to derecognize. If we are going to replace, let's say, the engine of the motor vehicle, just to use an example, we must make sure that the depreciation on that engine is up to date until the day that we are going to derecognize it. Quite correct, Enrique. I'm sorry, I missed. Let me just see. So we won't do depreciation of the vehicle. Yes, the depreciation. Let me just go back there, Lucille. So what is the depreciation on the vehicle? Let us just go back to that example. I probably should have pointed that out. So if you look at that, what is the depreciation on the vehicle? To answer Lucille's question, which I know Enrique has already basically done there, but you are quite correct, Enrique, you're not wrong. So what is the depreciation? When you draw up your note, your profit before tax note, and you have your material expenses there, and you are going to describe your depreciation on vehicles, what is the amount of the depreciation on the vehicle, assuming this is now our only vehicle? Exactly. Thank you, Enrique. Thank you, Asive. You are both spot on. So the depreciation expense on the vehicle for the year is 18,750, and that is the only amount when it comes to the depreciation expense for vehicles that we are going to disclose. We're not going to disclose in our financial statements the depreciation of the body separately, and the engine separately, and the tires separately, and the brake system separately. No, we are only going to do it for the vehicle on overall, right? You're most welcome. Good plezier. Right. So yeah, thank you just for pointing that out. So the depreciation on the overall asset is what is going to be disclosed. But because we've identified significant parts with different useful lifetimes, it means that we have to go and calculate the depreciation on each significant part separately, and we have to keep track of the accumulated part thereof. The depreciation that you accumulate from the one year to the next, you'll have to keep on separate accounts. Otherwise, you are going to find yourself in a situation where you do not know what part belongs to the engine anymore in a few years' time, what part belongs to the whatever you've identified as a significant part. Okay, thank you for mentioning that. So now I hope that is clear for everyone. So when it comes to the replacement of a significant part, ladies and gentlemen, let us start afresh. So there are 4 steps involved. First of all, you're going to bring your depreciation up to date. So for instance, if your financial year ends on the 31st of December each year, and you are replacing this part on the 30th of June of a particular financial year, it means you'll have to go and depreciate it for the first 6 months of that financial year, right? For January, February, March, April, May, and June. Then your depreciation is up to date until that specific day that you are going to replace that significant part. Then, secondly, ladies and gentlemen, our second step is to calculate and record. I should actually have said that for the first one as well. You've got to calculate and record your depreciation up to date. That's your first step. Second step is to calculate and record any possible impairment loss. Now, we saw last week, how do we calculate an impairment loss? If your carrying amount exceeds, if your carrying amount is more than your recoverable amount, it means you are carrying an inflated value and you are required to write it down. In this case, it will actually be realized because you are going to replace that part, right? So not only do you write the value down, it is a loss that has actually been realized. So that means you are going to compare your recoverable amount with your carrying amount, ladies and gentlemen. And if your recoverable amount is less than the carrying amount, then you are going to recognize an impairment loss. In that comprehensive example, we're going to see exactly that. Then our third step, and this now becomes very logical. Our third step, ladies and gentlemen, is we have to de-recognize the old part. We have to de-recognize the old part. We've gone through this little argument. I think it was last week or maybe the week before, which means that the cost you haven't got an account called vehicle at carrying value, for instance, right? So you've got to go and now take out the cost of that part from that account that contains the cost. So let's use that motor vehicle engine as an example. Let's say you are replacing that engine. It means you now have to go and credit the account called motor vehicles or vehicles colon cost colon or in this case where we have a significant part, it will be vehicles colon engine colon cost. We've got to credit that with the cost of the engine. If that cost was, let's say, 30,000, we've got to take the whole 30,000 out, and we are going to credit that account that contains the cost. Part of this derecognition, we also now have to get rid of the accumulated depreciation on that engine, right? And we know that at the moment it carries a credit balance once we have started depreciating it. This is now not straight after the acquisition, obviously. This is now a few years into the future. Let's say maybe 7 or 8 years into the future. So that means we now have to go and credit the account called vehicles colon engine colon accumulated depreciation, right? So that is our third step, is to de-recognize the old part or the old significant part. Wonder Bueta, you've got a hand up. Yes, would you like to ask something or add something or say something? You are most welcome. Just remember to unmute your microphone. Wonder? Oh, was it a mistake? Okay, no problem. But anyway, students, if you want to ask something in person, as you know, you are welcome, right? So, like Wanda did there accidentally, if you want to do it intentionally, you are welcome to raise your hand. We'll give you the opportunity to ask or to speak or to add any comment. Okay, let me maybe ask you now the question here. If you can type for me, I know we had a similar situation last week. Our fourth step, if we are replacing a part. Now remember, our third step was to de-recognize the old part. But if we are replacing a part, it means we are now going to buy a new part in that one's place. So what is going to be logically our fourth step? What do we also need to go and do? Can type for me. Recognize the new one. Thank you, Lucille. Exactly. So now we've got to go and recognize the new one, which means we have to capitalize the cost of that new significant part in an account, right? So if it's another engine, we are going to now go and debit vehicles colon engine colon cost, right? So those are the four steps. If I can just run through them briefly again, ladies and gentlemen, for in case somebody didn't pick it up. I know you can go and listen to the recording. We've got to bring our depreciation up to date. So we've got to calculate it and we've got to record it. We've got to calculate and record whether there's any impairment loss on that date of derecognition. We've got to go and derecognize the old significant part. And then lastly, we've got to go and recognize the new part. Okay, right. Thank you all for those comments and for answering the questions and for everything there. So now let's go to that significant. Sorry, that I was looking at the word significant. That comprehensive example. If I can just find it. Here we go. Example number 5. Shoes Limited. I hope we can finish it still before, let's say, 10 past, or maybe 5 past 1, because I know that you need a little break before your next class. So let's see how far we get, and then we can focus on our question bank. They say here, ignore value-added tax in this question, which makes it a little bit easier for us. They say Shoes Limited, a company in the shoe manufacturing, or is a company in the shoe manufacturing industry. I must have been half asleep when I typed this. Anyway, the financial year end of the company is the 31st of December. Okay, so that's important information for us. Then they say Shoes Limited owned a machine that had a carrying amount of 1,610,000 Rand on the 31st of December 2019. The machine was 2 years old at that date. When we originally purchased that machine, we identified 2 significant parts. So the machine had 2 significant parts, namely the machine body and the machine's engine. So it's almost like this machine might be like a conveyor belt kind of machine, right? Where you've got all sorts of moving parts which forms your main body, and they more or less have the same useful life. And then you've got the engine that drives that conveyor belt, which might have a shorter useful life. Okay, and here they give us a little table. They say on the 31st of December 2019, let me just see whether there was something else in the chat. No, so must have heard something different. On the 31st of December 2019, the following balances and details are available regarding this machine. So remember, our overall asset is a machine. So when it comes to our depreciation, we're going to only disclose the depreciation on the machine. When it comes to our property, plant, and equipment, note we are only going to have a column for the machine or the machinery if we've got more than one machine as such, not the body and the engine and any other significant part. But for our calculations from an accounting perspective and keeping record and track of it, there we need to separate them because they are significant in their own right from a value perspective. And as we can see, they've got different residual values, they've got different useful life. So therefore, we have to go and depreciate the body component and the engine component separately from one another. Anyway, so on the 31st of December 2019, the following balances and details are available regarding this machine. So the cost of the main of the body was 900,000 rands, and the cost of the engine, which might have been bought separately and perhaps even at a different time. In this case, it was all purchased on the same date. But I'm just saying in future, we might find there could be different acquisition dates here. In any case, the cost of the engine for that machine was 1,210,000 rands. Then on that 31st of December 2019, we already had used it for, I think, 2 years. It was 2 years old at that stage. So we've already depreciated it for the last 2 years. So our accumulated depreciation account at the end of 2019 has got, or our 2 accumulated depreciation accounts have got these balances. So the account that we call, let me just scroll up, machine, body, accumulated depreciation had a credit balance of 200,000 rands. And the account that we call machine, engine, accumulated depreciation had a credit balance of 300,000 rands at the end of December 2019. Then they give us some further details here. They say that our estimated residual value in the case of the machine is that we won't be able to get anything for it. We won't be able to sell it even for scrap. So it has got no residual value. So that means simply, ladies and gentlemen, that let us just type there. Let us just pause for maybe 10 seconds. If you can just type for me again, how do we determine the depreciable amount? If someone can just type for us there in the chat, how do we determine the depreciable amount? We spoke about this on quite a few occasions already. How do we determine the depreciable amount? The cost less the residual value. Thank you, Enrique. There, Enrique helps us out, right? So in this case, ladies and gentlemen, in the case of the body of the machine, let me just go back to the chat. There we go. Thank you all. Quite correct. Thank you, Miss Fanny. So that means that because there's no residual value in the case of the body of that machine, it means our depreciable amount would also have been 900,000 rands, right? But in the case of the engine, we can get some value at the end of the useful life. We can sell it maybe uh, for another user to use it for a further few years, or maybe we can sell off the components to a scrap metal dealer or whatever the case may be. But the fact remains that we have seen, we have estimated on the date of acquisition, we have estimated that at the end of the useful life, we can get 310,000 rands in value for that engine component. So the residual value was estimated at 310,000. Now let's just see how awake you still are after listening to me droning on for so long. So what is the depreciable amount of the engine component? If you can type that for us in the chat, ladies and gents. What is the depreciable amount? 900,000 rands. Thank you, Miss Finney. Thank you, Enrique. Thank you, Aneswa. Spot on. Right. So thank you, Zenanda, as well. Thank you all. So 900,000. So it's the cost of 1,210,000 less the residual value of 310,000, which gives us 900,000. Right. Okay. So we've got those details. Right. And then they give us some additional information here. They say on the 28th of February 2020, so this is now the following year, 2 months into the following year. Remember, our financial year end there was the 31st of December 2019. So 2 months after that, on the 28th of February 2020, the engine of the machine burnt out. The machine's engine burnt out. Again, they might have not lubricated it well, oil might have dried up and so on, and the engine had to be replaced. So we have to de-recognize it. Maybe I should change that to had to be replaced. Then they carry on. This they don't even need to tell us, ladies and gentlemen. We should know that by now. They say the depreciation on the damaged engine not yet accounted for from the 1st of January 2020 till the 28th of February 2020 must still be calculated, and we must still account for that, right? They say they calculated that at 25,000 rands, and the accountant was unsure about his calculation and asked you, which is now the chief accountant or the auditor for that matter, to check that calculation. So how are we going to do it, ladies and gentlemen? First of all, we know that it is the engine component, right? The engine component. Then, as you've already indicated to us, the depreciable amount is the cost there less the residual value. So our depreciable amount is 900,000 rands. And our useful life, as we've seen a few seconds ago, for the engine is 6 years, or we thought we should be able to use it for 6 years. It's not the case anymore, but that's probably our own fault. So now we've got to bring our depreciation up to date. So it means we are going to divide it by 6 years, the estimated useful lifetime in years. That will then provide us for a figure for the annual depreciation, but now we only need to, or we only must depreciate it for January and February, the first 2 months of the year, which means we are now going to multiply it by 2/12. Right. Does that work out? Does that give you 25,000, ladies and gents? I haven't checked the calculation recently, but last time I checked, it was still correct. So yes, yes, thank you so much. Thank you for all those answers. Thank you for all those answers, Enrique. That's an interesting one. Where you say that you were taught at school that an asset that you should keep it not depreciated beyond one rand. Uh, that's not a hard and fast rule. It's if you still can continue using the asset. You remember we said the other day that if the asset has got no value for you anymore, you should de-recognize it. So if you can still continue using it, even if you've written it down to 1 rand, then you should probably not reduce it to zero. But here we are now in a different situation. Why we have to depreciate this completely, totally, fully to zero is we are not going to further use that engine. We are going to have to scrap the engine, or we might be able to sell it for spare, for scrap metal or something. But we are not going to continue using it. Okay, you've got it, Henri. Perfect. So it does make sense if you could still continue using the asset to not write it down to zero, because then really you should then de-recognize it. Uh, they also said at school that buildings are never buildings can also be depreciated. Yes, as and I know that many teachers at school say you shouldn't. They combine land and buildings, but obviously it is better to separate your buildings from your land. Yes, I agree with that. That is actually very funny, because buildings do not last forever. Hotel buildings, for instance, the revenue service allows you a wear and tear or a hotel allowance. I think it's 2% per year, so you can write it off over 50 years. So they are saying it's unlikely that the hotel building will last more than 50 years. But anyway, I'm sure our construction is better than that. I mean, if you look at the Colosseum, when you look at some of those ancient buildings that are still standing, but definitely buildings are not forever. So one is allowed to depreciate that. Uh, yeah, a building can be depreciated if you feel it has got a limited useful life for you. You can. Uh, Fixed property or immovable property such as land, that is a different matter. As we've said a few weeks ago, I think it was 2 weeks ago or so. In the case of land, you will probably use the revaluation model because land tends to appreciate. So a revaluation model instead of a cost model will be more appropriate for land. Anyway, we digress. Now let us go and see. In the case of the where were we now? Oh yeah, now we got to go to our second step. We've now got to go and see whether there's any impairment. So we are going to record our depreciation. Maybe we can go to that journal. It is here. So we're going to debit depreciation with the 25,000 that we've just calculated, and we are going to credit the account machine engine accumulated depreciation. So now we've brought our depreciation up to date. We brought our depreciation up to date. So now we've still got to go and see, is there possibly any impairment loss? So we're done with that. We can tick that off. Uh, they also say the accountant also asked you to check the calculation of the accumulated depreciation of the engine on the 29th of February 2020. Well, that is fairly straightforward. It's the accumulated depreciation at the beginning of this financial year, which is the same as the accumulated depreciation at the end of the last financial year. So it is 300,000 rands, and now we've depreciated it with a further 25,000 rands to bring the depreciation up to date. So it means on this date of derecognition of that engine, it means that our total accumulated depreciation on the 28th or the 29th of February, when we are derecognizing the engine, is 325,000 rands. Right. Then they give us some further information here. They say the burnt out engine had a scrap value, so we can actually get something for it. The burnt out engine had a scrap value of 85,000 rands, and 85,000 rands cash was received from the scrap yard. Right. So it does have a scrap value. So, ladies and gentlemen, which means we now have to test it for impairment. So, what is, if you can type in the chat again for us? I know that it's in front of you, but I just want to see whether we're on the same page. What do we compare with what when we are going to do an impairment test? You can just use the abbreviations if you wish. We compare what with what? The carrying amount with the recoverable amount. Thank you, Lucille. There we go. We compare the carrying amount with the recoverable amount. So, what is the carrying amount? The carrying amount at this stage. What is the carrying amount? Yes, Henri. Can you calculate the carrying amount for us, ladies and gentlemen? I don't want to display it now. I first want to see whether you can calculate it for us. So remember, the engine had a cost of 1,210,000 rands, right? So the engine's cost is 1,210,000. The accumulated depreciation on that engine at this point in time, when we are going to derecognize the engine, is 325,000. So what is therefore its carrying amount at this point? I thought I could do that in my head. I'll have to. There you've got. I just grabbed my calculator. There we go. So our carrying amount at this stage is 885,000. Thank you for all those answers. Because you are all in agreement, I assume I don't have to go and calculate it myself. It has to be correct. So our carrying amount is 885,000 rands. What is our recoverable amount, if you can type that for us? If you look at the information on the screen, what do we regard as our recoverable amount? Remember, the recoverable amount we mentioned the other day is either its value in use or its fair value less cost to sell. In this case, it has no further value in use for us, but we have a fair value that we can sell it for. That's scrap value. Quite correct. You're all correct there. Thank you to everyone there. Aviwe, Henri, Kutle, Mushani, Lucille, Kelsey, and everyone else. I don't know if I've left anyone out. Sorry about that then. But anyway, so that means our recoverable amount is 85,000. So, ladies and gentlemen, if you take that into account, what is therefore, well, let's just say, first of all, yes or no. Just a yes or no question. Is there an impairment loss? Yes or no? Yes. Thank you, Lucille. Thank you. And Aneswa, everybody else, Aviwe, Enrique, and Mr. Tole, thank you. Zinande as well. Yes, definitely there is. Why? Because our recoverable amount is less than our carrying amount. Now, what is that impairment loss amount, ladies and gentlemen? If you can type that for us. What is the amount of the impairment loss? 800,000. Thank you, Kusle. Thank you, Aneswa. Thank you, Enrique. Thank you, Aviwe. Thank you, Mr. Tole. Thank you all. Right, exactly. In other words, you simply took uh, 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 the carrying amount, which was 800, what was it, 885,000. There, Mr. Culloden gives us the calculation there. It was 885,000 less the recoverable amount of 85,000. So that means our impairment loss is 800,000. Right, so let's go and see where we recorded it. So obviously we're going to debit an account called impairment loss, ladies and gentlemen. Again, this is an account, this is an expense account or a loss account. It's going to be closed off to our profit or loss account at the end of the year. So we're not carrying a balance forward, which simply means that we can go and we don't have to have these extended descriptions, because we're only going to disclose the impairment loss on that overall asset, the whole machine, not the engine itself, the whole machine at the end of the year, right? So that means we have to debit impairment loss, the expense for that 800,000, and we're going to create a new account that we are going to call, either if you use the combined approach, and remember we said both of them are good. I prefer the not combined approach. So you're going to create an account called machine colon engine colon accumulated depreciation and impairment losses. Or I would have rather started a new separate account, which I would then call machine colon engine colon accumulated impairment losses. But if you use the combined account, well, it makes it a little bit shorter. Okay, so now we've got to go and de-recognize. We've got to go and de-recognize the old engine, right, ladies and gentlemen? So what amount do we have to credit? This is an easy one because we can see it in front of us. What amount do we have to go and credit the cost account with? The account that we call machine colon engine colon cost. With what amount do we have to go and credit that account? With what amount do we credit the cost account? What is the balance in that account that we need to get rid of? Thank you, Enrique. It's that 1,210,000, right? Thank you, Miss Penny. The 1,210,000, right? So we have to get rid of the full cost. Now a little bit more difficult one. With what amount do we have to go and debit the accumulated depreciation and impairment losses account, assuming now that we carry on using that combined account? Let us see, ladies and gentlemen. It had an opening balance of 310,000. So add that in your calculator. 310,000. It started, no, sorry, not 310,000. I should have scrolled up. There we go. Accumulated depreciation, 300,000. Okay, that was the residual value. So press clear your calculator, and we start afresh. So it had an opening balance at the beginning of the year of 300,000 rands. Then we brought our depreciation up to date. We brought our depreciation up to date, which means we credited that accumulated depreciation account with a further 25,000 rands, right? So we've got to add the 25,000. So that means we're now sitting with 325,000 as is indicated there. And now we've gone, when we calculated and recorded the impairment loss, we have now added a further 800,000, a further 800,000 rands to our accumulated impairment losses or accumulated depreciation and impairment losses account. So what is the balance, that credit balance on that account now as it stands? I can actually calculate that in my head. Thank you, Kushle. You are quick, right? Thank you, Pokelo. Thank you, Zenande. Uh, Yes, there we go. Thank you all. Right. So at this stage, it's 1,125,000. So it means we also have to get rid of that balance. Obviously, that will now be a debit balance. So it means we have to go and credit our accumulated depreciation and impairment losses account. So let's go and do that, ladies and gentlemen. So there we go. We can do it in one step or we can do it in two steps. In this particular case, it was done in two steps. So, ladies and gentlemen, we've already mentioned there the cost needs to be credited with that 1,125,000 rands. Our machine, the engine of it, the accumulated depreciation and impairment losses now also has a balance of 1,125,000. That is a credit balance. So to get rid of it, it means we now have to go and debit it, right? And then they also said that that the scrap value dealer bought that old machine from us. We assume he paid us immediately, so that means we can go and debit the our bank account with 85,000 rands, and we can. I'm not 100% sure whether I agree with this entry actually. Let me just think about it. Ladies and gentlemen, we've got to change this. I'm so sorry. I'm so sorry. Uh, there's an error here. Um, let us maybe there's not an error, but let us do it my way. Okay, let us do it my way. We'll do it in one entry. So what I would have done here, I would have debited the what is it, the machine accumulated depreciation was 1,125,000, and then I would have debited the bank account with 85,000 rands, and then that entry would then have fallen away. So that would have only been. But you have to have both entries. Mr. Kaladin, I'm talking myself, I'm painting myself into a corner here.
Hi guys.
uh,
So what's Mr. Colin, Dr. Colin is saying is that for the derecognition of the asset, we can basically utilize one journal entry and show everything as one journal entry. Am I right, Dr. Colin?
Yes, no, you're 100% correct. That is exactly what I mean there. So that could have been done in one entry.
Yeah.
I'm
So
just now I see why this looks so wrong. That looks like it's 11 million. I'm so sorry. There is one
extra one.
digit one too many. That is why this just didn't look right to me. Okay, I'm so sorry about that, students. There's another typo. Like I say, I don't know, Mr. Borman, a previous colleague of mine and myself, we combined to type it. So I don't know whose typo that is. It might probably be mine, but there's one too many. So that should be 1125. 1125 000, not triple one. Sorry about that. There we go. Thank you, Mr. Cullinan. Right. Okay, ladies and gents. So now we've de-recognized the old engine, and I've run over my time. So now it's just a question of going to recognize the new engine. So I'm going to be very quick about it. In the additional information, they told us there, point number 5, that a new engine was acquired and for an amount of 3,800,000 rands, and it was paid for in cash on the 29th of February. So this is very straightforward. You know that from financial accounting one. It is simply now a question of reusing. You are reusing the same account. So this didn't suddenly become old engine. That was just engine, like we said earlier. This doesn't suddenly become new engine. It's still the same account. So you're going to debit that same account, machine colon, engine colon, cost with that 3.5 million, or was it 3.8 million? No, don't tell me there's another type. Okay, that should actually be 3.8 million. Sorry about that. Like I say, I think either myself or my colleague was half asleep at that stage. Thank you, ladies and gentlemen. Okay, so the break isn't as long as I promised, but at least you've got a few minutes before your next class starts. So thank you very much for the good attendance once again. I've got another class this afternoon, like I said before, so I'm not sure exactly when I'll be able to upload this recording. It might only be after 5 this afternoon. Thank you. Have a lovely afternoon. Bye bye.